Everyone was expecting the Fed to bring the fireworks last week, but it was actually President Trump that lit the fuse with a surprise tariff that shocked the markets into their worst week of the year.
The worst week for the U.S. markets so far in 2019 saw the S&P 500 and the Russell 2000 both down about 3%. The Dow Jones was down just under 2.6%, and the NASDAQ was down almost 4%. But the NASDAQ is still the only U.S. index up over 20% for the year. Foreign and emerging markets were also negative last week, with foreign markets down about 2.6%, while emerging markets were down over 4%, and now the emerging markets are only up 6% year to date. The chart we're looking at today is of the S&P 500. And last week we also looked at the chart of the S&P 500, and I discussed an important level that we needed to hold right above the blue line on this chart, right around 2950. But towards the end of last week we saw the S&P 500 break down below that blue line, and as of Monday morning on the 5th, we're actually about 2% lower than where we closed at the end of last week. So this could be what's known as a potential false breakout on the S&P 500. There are a few important levels that we're watching for on the downside here, but the most important is right around 2750, and that's the level that the S&P 500 pulled back to in May before it ultimately rebounded and made the all-time highs.
Last week in the news, the Federal Reserve delivered on their rate cut of 0.25%, but they surprised the markets by saying that they're going to slow down on reducing the assets on their balance sheet. The markets didn't start to sell off until an interview with Jerome Powell came out after his press conference, and he stated that the rate cuts were just a one-off event, not a trend. So they crushed the hopes of investors that we were going to see a possible rate cut in September and then also again in December. The larger sell-off happened later in the week when President Trump surprised everyone, saying that they are going to add an additional 10% tariff on $300 billion worth of goods from China. And China then responded by devaluing their currency against the US dollar. Now this all occurred after President Trump sent a trade negotiation team over to China, and that trade negotiation team left after the first dinner because negotiations were not going anywhere. After this news came out, that's when the major sell-off happened, which led to the worst week in the markets that we've seen all year. And lastly, not only were the emerging markets hurt by the news out of China, but they were also hurt by oil having its worst day in over 4 years, as emerging markets are heavily correlated with the Chinese markets along with oil. Not only is the bad news piling up, but also we're entering a bad time for seasonality for the markets.
Over the past 10 years, August has been the worst performing month for the S&P 500, so there may be some more volatility ahead.
Thanks for watching. If you're on Facebook, please like and share our video, and if you're on YouTube, please like and subscribe to our channel.